Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Today I want to tackle a question that I get quite often when it comes to politics in the stock market and how do they impact each other. Now I'm going to go ahead and try and cover the 3 to 4 biggest ways that politics impact the stock market. My voice is a little hoarse. It's Monday. Okay, I'm trying to do the best I can, but let's go ahead and get into it. So the first one is taxes. As you know, the Congress, or they create laws, right? You got the House, you got the Senate, they write tax laws, the president signs it, and then the IRS is supposed to enforce it. Now, tax law absolutely does impact the stock market, but it does so in a bunch of different ways. For example, you can pass a tax credit to give middle income families more money. That is going to have them to go spend more, which can impact the stock market as businesses collect more of that money. That's one way to do it. But also, you can cut taxes for businesses, which we have been doing since the early 2000s, since the Bush presidency. One of the many reasons why we have the whole debt ceiling crisis. We talked about that before. Aside from that, when we see businesses see their tax rate reduced, those stocks tend to rise. So that is one thing that does impact people. Everybody always pays attention to taxes. So that's one of the easiest, most obvious ways that the stock market is impacted by politics. Some parties are more aggressive on raising taxes and cutting taxes than others. That's a conversation for another video. However, taxes, one of the easiest first things you can look to see the impact of how the market is impacted by politics. The next one is policy. When I talk about policy, this is a broad ranging term here in terms of international policies. We can see that with Russia and Ukraine. We can see this with trade policies between the US and Mexico, between the US and Canada, and even the US and China. Sometimes these policies can be fine, sometimes they can't be. Sometimes you run into a conflict like Russia and Ukraine that can tank the stock market and really hurt supply chain and a bunch of other things. Every person, every Congress, every president is going to look at these things differently, and to me, they are pretty unpredictable because, again, you don't know who the next 3 or 4 presidents are going to be. You don't know which country wants to step out of line and kind of do crazy things as we're seeing in Russia right now, and then you don't know how other countries and other players will evolve and kind of get into this space depending on what it is that you're trying to create and where the market and the economy are going. But this can impact, again, trade policies. The previous president, we ran into an issue where there was a trade war and we were paying more in terms of tariffs for certain goods versus other goods. There were times where there are companies now that are shifting a lot of their manufacturing, Apple being one of those, shifting their manufacturing from China to Mexico. And that's because at the time, China had a bunch of COVID policies that hampered the production of iPhones, which is one reason why they saw the biggest drop in sales that they've seen, I think, in the last 10 years or so. So because of that policy, is international policy, because of that, they're now moving their production somewhere else to help their stock recover based on what we have seen. So that is one. The international policy is extremely complex. You need somebody who studied international business and politics. That ain't me. But I can tell you that those policies do absolutely impact the stock market. Which stocks, it absolutely depends. This is not something that's always broad ranging. We also saw, because of the Russia-Ukraine conflict that's been going on a little over a year now, the oil stocks really started to take off a little bit before the crisis, but they continue to do well because Russia was one of the top 5 producers in oil. And since we have put out an embargo and a ban from buying and selling Russian oil, that restricted the supply, that increased the demand. That is one reason why those oil stocks did well. That crisis, though, does not mean that every single stock in the world or every single stock in the US is set to rise. That was not the case in 2022, in case you guys remember. But almost any oil stock, you just throw a rock and hit one, that was up at least 20%. ICE Petroleum, perhaps the most famous, was up more than 40%. So that's one other way that politics can impact the stock market. The last one here is interest rates. Now, interest rates are an indirect impact on the stock market because, well, technically it's indirect, because the Federal Reserve is the one that controls interest rates. But everybody on the Federal Reserve is not elected. The chairperson of the Federal Reserve is appointed by the president, and that appointment can last, I don't know, however many presidents, I suppose. For example, Jay Powell, I believe, was put in place under President Trump and is continued under President Biden. And that's supposed to be a neutral position. But again, the president appoints that person. They're not elected directly. So that's why I say it's a little bit of an indirect position. The other thing too is interest rates have to do with inflation. Inflation has to do with supply chain and also consumer behavior. And as we know, and we've been learning over the last year and some change now, when you increase interest rates, the stock market tends to fall. It makes it very difficult for unprofitable companies to do well. And the opposite happens when you cut interest rates. It allows companies to grow, and usually you start seeing some really crazy evaluations, and companies the stock market do incredibly well during those periods. This is why from 2008 to really about 2020, we saw the longest bull market we had ever seen, because interest rates were at a historic low. That allowed companies and people to borrow money and grow their companies aggressively. That easy, cheap money is not here no more. And that is one of the reasons why the stock market is a little bit choppy, and definitely why it was low. One of the reasons, rather, why it was low in 2022. So those are the three primary reasons and ways that politics can impact finance. That is taxes, interest rates, and policy. Now, those are the big things. Okay, there are other smaller things left and right that can fall into this. I would generally kind of bucket those into policies, and that again can change based on how people feel about certain things, who is elected, who has control of the House and Congress, and all of those things. But those are really the three biggest impacts. How much attention should you pay to politics when it comes to the stock market? Honestly, I have to do it because I do these videos every day. Okay, and I have to know the ins and outs and all the details and all kind of stuff. I would say that a scale of 1 to 10, maybe a 4. I think it's good to be informed about politics just in general, just so you know what laws are going on and you can go and vote and be informed. Okay, but for a stock market perspective, long-term investors aren't in the day-to-day. I'm not tracking and following every single bill, nor should you have to. One other thing about policy too is that we know that the this place is Secure Act, I believe is the name of it, where you're able to, make some changes. We covered that entire thing, where you're able to make some changes to your 401k, make some changes to your Roth IRA, and even open a savings account at your employer, which can impact not necessarily the stock market, but can impact you as an individual. So yes, I do think you should pay attention. I don't think you need to be what they call a policy wonk or policy expert. I'm not one of those either, but it is something that you should be aware of. But as a long-term investor, you don't need to check your account every day. You don't need to check every stock every day. You certainly don't need to check, what's Senate.gov every day either to see the ins and outs of every single bill. It's just something to be aware of and something to say, look, if I know a certain policy is happening or it's passed, then perhaps I want to change my investments just a bit. An example of this is the infrastructure bill. That was a political thing that was done. It's generally a good thing, and that is passing and gone through. It is why companies like John Deere, United Rentals, and others are doing quite well. So those are things to be aware of. The CHIPS bill is another one that has not necessarily helped, even though NVIDIA has done quite well pretty recently. But at the time that we had covered that, Intel, Apple, there was another one I had mentioned, Taiwan Semiconductor, they were kind of middle of the road. But again, that was a political move. Things that were passed became law, and it did impact the stock market. So everything that we mentioned will impact the stock market in one way or another. The key thing is it impacting the entire stock market, like interest rates, or will it impact just a sector, like certain policies or certain bills and things that have been passed? All right, that is it for me today. I'm sorry for my voice. I know last week we were kind of on and off. I don't know what it is about hotel Wi-Fi. It just does not upload things the way I need to upload. I don't know. So apologize for that, but we want to get back on our regular schedule this week. Let me know what you think in the comments below. If you have any questions or things you want me to cover this week, y'all know what to do. Hit me up in the comments. Don't forget to like and subscribe to the video. And then as always, the members only is open. We do exclusive videos each and every week. All right, that's it for me. Talk to you later. Bye.